Um, that is to me. I believe that that is true, right? It's okay to have one trading setup, but most times I feel that it's a bit limited, right? I feel that as a trader, you should have at least two um, setups as you trade, at least two, right? For me personally, I trade three different kind of trade setups, right? So it's not necessary that you must trade just one setup, right? When I was learning how to trade, I actually learned a lot of different concepts, like different concepts, right? Then as I started developing, I started knowing the ones that I can easily understand, right? Oh my God. So I started knowing the ones I can easily understand and the ones that I cannot, easily grasp, right? So one of the things I want to say is that it's okay to have different trading models, right? It's okay to have different trading models, but the thing there is that you have to streamline it, right, to the one that you can easily understand, right? For instance, now someone can trade maybe trend lines and other blocks, right? Someone can choose to trade two different setups. Just give me a moment, please. All right, so someone can choose to have two or three different trade setups, right? And those are fine, right? So for me personally, I have like three different trade setups which I use depending on what I see on the market, right? So I'm not just trading one thing, like a one trick pony, right? That's what some people advise, like you must trade just one setup. Some people even say it must be one time frame. Well, you're not really being flexible when you trade that way because sometimes the market is not going to deliver that which you know, right? So it's always best to be flexible, right? Learn at least two or three different approaches, to trade the market, right? Learn at least two or three different approaches to trade the markets. Just have different things which you should look at, right? At least two setups. I look at right. So this first setup is simply an ICT setup, right? I kind of posted the chat on my Telegram community for you guys to see, right? It's a very profitable setup which I have learned and I've practiced over the years, right? So now I want you guys to understand this, that we have something that we call correlative analysis, right? This is the foundation of this class now. I will just delay a bit so other people can join. So we have what we call correlative analysis, right? Right. I will not be going too deep because I don't have much time. Right? I just try to just summarize it. So what this simply says that is this simple analogy is that we have currency pairs that have relationship with other currency pairs, right? That's what this is all is just saying, that we have some currencies that are related to other currencies. For instance, now, if you have maybe cousins or siblings, right? When you see two siblings, you always see some kind of similarities in them. Maybe they may have the same eyebrow or the same kind of eyes, maybe the same kind of skin color, right? So they have cousin. We have what we call cousin siblings. I'm sorry, cousin currencies, right? They kind of have similarities to each other, right? They are kind of symmetric. They have some kind of identical patterns, right? So when we are looking at correlative analysis, we are trying to look at pairs that have a similar relationship, right? For instance, now we have two pairs that are cousins, right? Two currencies are cousins. We have the euro and the British pounds, right? These two pairs tend to go in tandem. That means most times when euro is bullish, you will tend to see, sometimes if you watch your charts, if there's a news, right, maybe a news on euro, like an euro news, and that news is bearish, just check your charts very carefully. You notice that GBP is going to drop too. Like, just watch your charts carefully. It doesn't matter the pair, whether it's whether it's GBP, JPY, whatever. As long as a pair that has euro is bullish, right? You notice that GP will likely be also bullish, right? So these pairs are correlating, like they have a similar relationship, right? So another pair that has, so let me just complete it at once. So in this class, I'm talking about several pairs that are correlating, right? So we have Euro JPY, right, which is what I'm using to give my example now. So we have Euro JPY and GBP JPY, right? These are correlating pairs, right? We have Euro US, these are the ones I trade, and then GBP US. These are both correlating pairs, right? Two of them are correlating, meaning that they have a similar relationship, right? They have a similar relationship. That means whenever you see Euro going up, most times you will see GBP USD going up as well, right? I want to teach you guys how to use this information to your advantage, right? So now another correlating pair that we have the Nasdaq, right? We have the Nasdaq, NAS 100, and then we have the US 30, right? So you can call it Nasdaq or NAS 100, right? But I like to call it NAS 100, right? You can call it Nasdaq or NAS 100. They're still the same thing, right? Then we have another pair that correlate as well. We have, I think, AUD USD and I think NZD USD. I don't trade these ones, right? These are all pairs that correlate. They move in the same, they tend to move in the same direction. And we also have gold and silver. Right? These are the pairs that tend to move in the same direction, right? Gold and silver, right? So if you're trading gold, you should be looking at silver, right? So these are the pairs that correlate, right? So just for completeness sake, we have to add this as well, SP500. But these are all correlated markets, right? So this is the foundation of this class. Now, how are they correlating? This simply means that whenever you see these pairs, right, they have a similar relationship. This is why I find it very, very difficult to trade Euro GBP, because I know Euro USD to be moving the same direction with GBP right? This is why I find it difficult to trade this particular pair, because ordinarily Euro and GBP should go the same direction. So I don't really know how people trade this particular pair, because you're trading Euro against GBP. So I find it very, very confusing to trade this kind of pair, because I know that if Euro is going up, GBP should also go up, right? And if Euro USD is going down, GBP should also go down, right? So I find it very difficult to trade this particular pair. So this pair thrives on instances where there is a kind of divergence, or a how do I put it? When the market is not moving in the same direction. So now, this pair thrives when the market is not moving in the same direction. That means when Euro USD is maybe more bullish than GBP, right? Or maybe GBP is more bullish than Euro. That is when you tend to see the kind of clean movement, right? So imagine when Euro and GBP are both bullish. How do you expect Euro GBP to move, right? It's very unlikely, right? So this is why I find it very difficult to trade this pair. Now, these currency pairs that I've listed here are all pairs that tend to move in the same direction. So now, how are we able to use this to our advantage, right? So you have understood these pairs, they tend to move in the same direction. How do we now use this particular strategy I want to teach you guys, right? Now, when you are watching when you're watching these collective pairs, right? Now, notice this. If you're trading JPY, you should also be looking at Euro JPY, because they are correlating, right? So you can use Euro JPY to know what GJ is going to do, right? You can just look at the market and just say, okay, this is what EJ is doing. That means GJ should also follow suit, right? Now, typically in a symmetric market, right? When the market is symmetric, please, are you guys following me? If you can hear me, just type something in the comment section. If you guys can follow. If you can hear me, just type something in the comment section so I can know that you guys are following. Can you guys hear me? All right. Someone say you can hear me. Okay. So now, all these pairs I've listed here, right, that are together, right? Now, whenever you see a correlating pair make a high, right? Let's assume that this first pair now is Euro USD, right? Assume that this first pair here is Euro USD, one on top here is Euro USD, right? Whenever Euro USD makes a high, we also expect GBP USD to do what? To make a high as well, right? This is now where the strategy now depends, right? Whenever you see Euro JPY make a high, you want to, what is that thing doing that? Okay. So whenever you see Euro USD make a high, you want to also see GBP USD what? Make a similar high too, right? That means you want to see the markets look like this, right? It's what we call a symmetric market, right? It's what we call a symmetric market, mean that they are moving in tandem. Tandem means they're moving in the same direction. So whenever you see this is a symmetric market, right? Whenever you see Euro and GBP, moving in the same direction, they are in a symmetric market, right? This is a symmetric market, right? This is what we call a symmetric market. Whenever you see these two pairs moving in the same direction, that is a symmetric market. But now, this is where we focus, right? Whenever you see the market making highs and lows, we call this a symmetric market. But now our focus is on the instances where the market breaks this symmetric movement, That means there's now what? A break in correlation, right? This is where we focus on. We focus on when the market gives a break in correlation. That simply means that now EURUSD is now doing what? Making a high, right? EURUSD is making a high. Right? Let me clone this. So EURUSD is making a high. Why GBPUSD is not making a high? This is where it's because very, very tricky, right? When EURUSD makes a high, and then you now see that GBPUSD is failing to make a high. This is where we really pay attention. This is where the whole strategy now comes into play, right? You see, that these pairs they move in the same direction, right? You're seeing EURUSD make a high, but GBPUSD is not making a high. This is what we refer to as what an SMT divergence, according to ICT, because it's an SMT what divergence, right? Or you can call it what a crack in correlation, because you can CIC, right? A crack in correlation, right? So we can call it a CIC or an SMT divergence, right? That means there is what a crack in the correlation of this market, right? EURUSD is making a high, while GBPUSD is not making a high, right? Now, this simply implies that GBPUSD is what? Heavy, right? It is heavy, right? This implement it is heavy, and it will likely see what? A downward movement, right? So now, whenever you see this kind of instances form, you're focused on the pair that has what? The divergence, right? EURUSD is making a high, but GBP is not making a high, right? That means that GBP is what? Heavy. And that simply means that you should expect what? Bearishness, right? You're not expecting what? Bearishness on GBP USD. So now you're looking for this gives you an idea that the market wants to do what? Wants to go what? Bearish, right? That is what this simply implies, right? It wants to go down because you're seeing EURUSD having enough orders to make a new high, while GBPUSD is not having enough orders to push past this previous high. That simply implies that GBPUSD is heavy, and this might result what? To bearish price action, right? It can result to what? Bearish price action, right? So now, for a bullish example, it's just the reverse, right? For a bullish example, it's just the reverse. That means when the market is making a low, right? USD has made a low now, right? This USD now, sorry. USD has made a low, right? We're seeing a low form on Euro USD, very clean low form on Euro USD, and then I don't know. I'll show you guys a trade I took today. Don't worry. I'll show you guys real examples. It's not just theory. Now you notice that the correlating pair fails to make this low, right? This simply means that this particular pair, right? This simply means that this particular pair is what is not heavy, right? The market is unwilling to go down, and this what might result in what? Bullish price action. That means you are looking for what? Bullish price action in this kind of scenarios, right? This is the whole trading setup, right? Of course, it is subject to a higher time frame, right? I'll show you guys examples. Even with the trade I took today, I took a trade on this with this idea today. So now you're saying that USD is making a low, but GPSD is not making a comparable low. That means you're looking for what? Bullish, um, a bullish move on this pair. So your focus is now on this particular weak pair, right? I mean, this pair is weak, right? We call it a weak pair. It cannot go lower. That means USD is what? GPS is weak. So that means it wants to go what? Go up, right? So it's very, very simple. The sense that whenever you're trading a particular pair, always look at the correlating pair when that pair gets to what? A higher time frame point of interest, right? It's not just you're just randomly trading it, right? Maybe just because you saw a low and a high, you just buy. No, you have to have a higher time frame reason. I'll show you guys with a real example. Don't worry, right? So now this thing I just explained applies to Euro JPY and GPJPY. That means if maybe there was, let's assume this is Euro JPY now. This is Euro JPY, and then this one down here is BPJPY, right? It's still the same thing because those pairs are what? They are correlating, right? You see how I group them. Euro USD, these two pairs are correlating, these two down are correlating, gold and silver are correlating, ADUSD and SDUSD are correlating, then these three are correlating as well. So it's the same thing when you're looking for what? A crack in correlation in all these pairs, right? So you're looking for the market to do what? To give what? That failure to make a low, that gives what? A bullish setup, or a failure to make a high, which gives you what? A bearish confirmation. And of course, everything I stated here is what? Subject to higher time frame analysis, right? So it's not that you're just doing this randomly, right? It's subject to what? Higher time frame analysis, right? I'll show you guys and a trade I took, right? So now this is it. So this is just the whole idea. This is the whole idea of the market making, giving a cracking correlation. That is what this is all about, right? The market giving what? A cracking correlation, right? This is all subject to higher time frame analysis, right? It's all subject to higher time analysis. Now, let me now show you guys the trade I took. Let me quickly show you guys on my Telegram community, just so you guys can see that I actually took a trade with this idea, right? So I think you guys can see my Telegram community now. So I think I told you guys to study these charts before I will give the class. So I told you guys that you guys should look at told you guys to look at this pair. This was the GBP JPY pair. Told you guys to look at this trade. You can see that GJ formed a low. But look at the next trade here. Look at Euro JPY. You can see how it failed to make a low, and I bought it because of that. Right? This was a trade that I took on my life, on my my prep account, right? Once again, this is GJ. You can see how GJ made a low. Now look at EJPY. You can see EJPY did not make a low. That was why I bought. And then we had an order block inside there. And then you can see how price hit my TP. You can see the entry there. And then you can see the exit there, right? So I had to cover my losses because I don't show figures publicly, right? I don't show figures publicly. I feel that someone earnings should be private, right? So I hope you guys can see what I'm showing you guys. Look at it again. This is GJ. GJ made a low, right? But looking at EJ, Euro JPY, you can see how Euro JPY failed to make a low. And then you can see that I bought at this point. Then you can see my take profit at this low, and you can see what happened. Market actually went from there right to my take profit, right? So let's go to the charts now to explain this further, right? Let's go to the charts now to explain this more better, right? So now let's start from the higher time frame analysis, right? I told you guys that this is subject to higher time frame, right? So we have to start from the higher time frame. So let's go to Euro JPY. So Euro JPY, right? This is JPY now. Okay. So now, what was the higher time frame reason for buying this market, right? Why did I buy on the higher time frame? So you can find on the daily charts. So look at the daily charts here. All right. So this is a very, very beautiful trade, like for real. Beautiful. Now, I was looking at the daily chart. You can see that obviously Euro JPY has been bullish. You can see market is bullish. You can see market breaking highs. So you don't need any profit to tell you that the Euro JPY is bullish. Right? When the market is making, when the market is making highs, it's bullish, right? You don't need any profit to tell that the market is bullish. Right? You don't need any profit to tell you that the market is bullish, right? So we see market making highs, breaking high, and then what did I see to make me to buy? Look closely. There's an order block here, right? And I told you guys that order block is always the most important part of an order block is actually the open price. So this open part of this order block was right there. Price filled this imbalance, took out this liquidity low there. So this order block was my point of interest, right? That order block was my point of interest. That was why I was looking to buy this pair. So you must always have a higher time frame interest, right? Whatever you're doing, must always have a higher time frame reason, right? You don't just take a trade just because of taking sake. You must have a higher time frame reason for buying that trade. If you're selling the market, you must have a higher time frame reason for what? For selling that market, right? It's not just you're just taking a trade just because you feel like you should take it, right? You must have a higher time frame sponsorship, right? So that was a higher time frame sponsorship on this particular market, right? So now, what else did I see? So I simply went to the lower time frame, and then I was not looking at the lower time frame. So we went to the lower time frame. That was, you remember that higher time frame order block there? So that was it. You can see the trade there. So now So that's on the 3 minute charts. So I took the trade. It's on 3 minute charts, right? So markets hit my other block there, right? Now I now compared this. So you can click on the compare button and then compare with GJ. Let me show you guys. Let me show you guys what happened there. So GBP, JPY, right? So new pane. So you guys can see what I'm talking about, right? All right. So let me quickly change this to sorry. I want to change this to candlesticks. All right. So candles. All right. Thank you. All right. So this is euro at the top, and this is GBP, JPY at the bottom, right? So watch this. Watch this. Pay attention to this. Now, price hit our daily order block, right? And we are bullish on the high time frame, right? So when price hit our daily order block, right? What did I see? Now, I was watching these charts. Notice that on this particular pair, which is the one below, on GJ, what do you see there? Let me put a horizontal line here. Watch it, right? So watch this as well. So if you watch GJ very carefully, you can see that GJ actually made a low, right? There was a kind of low that was formed there. And GJ kind of went below that low, right? On my broker, I don't know why it's not very clear, but it went below this low on my own broker. Like it went very clear below this low, right? That's what I was looking at. The market made a low, and I don't know why this broker is not showing that low very clearly. Market actually went below this low on my broker. Let me just touch this and look at the low here. Look at this price here. Look at this low. So I'm touching this level. This is a 1, this 37, and this is sorry, 370. All right. So let me try another broker. I don't know why it's not showing that low. Let me just try another broker because on my own broker it was very clear. All right. So GBP, JPY. Let's try another broker. All right. Let's try forex.com. All right. Let's try forex.com to see. Okay, can see it already. Right. It did. I don't know why that one is different. All right. Okay. Candles. All right. I think it's clearer here. Yeah, it's clearer here. So you can see there. So on this particular pair, you can see that this actually went below this, right? If you're using the close prices, this went below it, like very, very little, right? I was looking at this, market went below this, right? Even if you use the close prices, you can see that there was market closed below. Even if you use the close prices, you see that market actually closed below it, right? You know, this was a high, market closed below this low. But in this scenario, market did not close below low. So you can actually use the close prices or the candlestick, right? So I think on my own broker, it went below. Like you can see the screenshots, it actually went below on my own broker. But let's also use the close prices for this example here, right? It's closed below that low. But watch this. On this chart, you can see that price clearly did not close below the low, and it did not even try to go below it. And watch very carefully. On this chart here, we had a very clear break of structure, right? We had a very clear break of structure at that point there. You can see this swing high here, right? A swing high is a high that has a lower high to the left and a lower high to the right. So we had a break of structure here. We had this other block resting here. So we had this other block here. That was another block. Last down candle, right? And then we had some inducement before it, right? So we had some inducements. So we had some inducements there, right? So you can see this inducements that was printed right there. These are the inducements, right? Just before our area of interest, right? So when I saw this happening, I saw price close below this, and on my broker, it actually went below this low. Actually pushed below this low on my broker, right? We can see how Euro GPY did not even try to come close to that, to going below this low, right? So I was watching that, I was like, okay, this market wants to go bullish. And seeing that this was our daily order block level, right? This is our daily order block level. That was my buy setup right there. We bought here, and then you can see how the market went comparably was above this high, right? So that's just one example. So let me show you guys a second, and you can see once again, let me show you guys the chart again. So check my Telegram once again. You can see the trade here, right? You can see the trade here, right? Let me just quickly show you guys the trade again. You can see the trade again, right? You can see it here. You can see on my own broker, it actually went clearly below it, right? You can see UJPY. That was my entry there. TP there, and then you can see how that was a very nice one, right? So that is just the setup. Right? Let me just quickly show you guys another example of this, right? Let me show you guys another example of this. You guys can really understand this. All right, this was a very beautiful trade. Like, shush, this setup is like very high probability. If you can combine it with higher time frame, higher time frame sponsorship, it's a very, very high probability trade, like high probability. We can combine this thing with higher time frame, higher time frame reference points. All right. So now this thing I'm teaching you guys is not just to go and copy and paste on your chart on Monday, right? Whatever I'm teaching you here will profit you. This is what I always tell my page students, right? So I'm assuming my page students as well. I always tell my page students that whatever I teach you, always make sure that you back test with it. This I'm teaching you now. Open your own chart. Look at the pairs I listed that are correlating. Then use your own hand to study when the market gave this thing and see how often it plays out, right? So whatever I'm giving you guys here should not just be traded just because I taught it. This is the reason why a lot of students struggle, right? A lot of people struggle because they just copy the strategy and just start reading in life. They don't even back test. They don't study. They just go, do a deep study. They just copy, and then they start failing and start complaining. So whatever you're being taught, for it to profit you effectively, you have to go to your own chart and study it, back test with it. Use a demo, a trading software that allows you to go back in time, study it, back test it, right? Build a journal with back test data. Take screenshots, record it in your journal. That is how you build confidence. Some people are always saying that you must trade live, you must trade live. Bro, backtesting is superior to live trading. Your mentor doesn't have to trade live with you, right? If you can study on your own, carry the information, go to your own chart and study it, backtest it. You're going to get a very, very good hang of it, right? This is what many people actually avoid. They don't like backtesting information. They just want to just copy and just want to make money without studying. You have to, anytime I'm teaching you guys, simply open your chart and study it. That is how you get mastery, right? So let us look at the last example. I think it was yesterday. I think it was on indices. So there's one last example here. It was on US 100. Right, that was yesterday. So let's quickly go to the higher time frame. Okay, let me use another indices. I don't want the one that I already have something on. Let's use US. Let's use this one. It's blank. Right. I think there was a reason. Okay, I have like 9 minutes left, so I'll be a bit quick now. Right. So we had CPI drop, and then sorry. So I have CPI drop, and then watch something that happened there. Right. I told you guys that US 30 and indices are correlating, right? US 30 and sorry, Dow Jones. Right now, let's compare this. This is Nasdaq now. This is Nasdaq chart. This chart is Nasdaq. Right, the name of Nasdaq, you can call it US 100, you can call it Nasdaq, you can call it NAS 100. So this is still NAS 100 charts, right? This is US 100, still NAS 100, right? So if you compare this with US 30 on a new pane, right? Compare this. So I want to bring in candlesticks, right? Candlesticks. All right. So I don't have much time, so I can't really go through the higher time frame, reasons for this. I don't really have time, right? But just to be brief, we had this big there was a gap here there was a gap here. You can see this big candle. There's a gap here, right, on some brokers, right? And if you compare this very carefully, watch something here that happened. Watch this. This was the reason why the market bought yesterday, right? Watch this. So now if you look at this market very carefully, you can notice that on this particular pair, market clearly made a low here, right? That was a very clear low and was this pair below here is US 30, right? So you guys remember this is US 30. That is down here. That is Dow Jones, right? Dow Jones, right? What the pair above is was Nasdaq, right? The pair above is Nasdaq. I've written it here. The pair above here is Nasdaq. Right, this is Nasdaq. Right, I told you guys they're correlating. Now, watch very carefully. On this same data, notice that there was what? Can you see this? Can you see this? On year 30, there was a low formed, but on this correlating pair, market failed to make a low, right? And not only that, there was a confirmation there. What's this confirmation? Markets gave a shift in market structure. Markets broke above this high. And then what did it do? It came back to what? To tap into this other block. So that would have been your entry on this market, right? Although I didn't see it early and I didn't take this particular one, but I actually saw it after it had happened, right? So you can see that this was actually another one. So you can see there was actually what a low form there, but US 30 also Nasdaq did not form a low. That means that was this guy was weak and was bullish, and also we had a lot of reasons to buy it. So we had this liquidity resting here, had this liquidity here, this inducement that was formed before this original POI. So we had this inducement that was formed there, which was a liquidity, and this low was formed from the previous day. So this was a kind of liquidity target for this market to go higher, right? There was liquidity targets just here. So there was a liquidity target just at this top there. And then if you go to maybe 30-minute charts, you're going to see it more clearly, right? Let me take out this lower one now. So you can see that the market actually did that, came, broke structure by closing above this high, right? So what happened? The market dropped back to this other block, which was on the 1 hour, right? Came back, times other block, and what happened? It bought towards this inducement high. So that was a trade on Nasdaq case today. I can see how I've given you guys two very good examples of recent trades that played out with this idea. Right? The point is that divergences are not to be done without higher time frame sponsorship. You must have a reason why you're taking the trade, right? You must have a reason why this trade should pan out. I must be on a higher time frame, right? Maybe the 1 hour, 2 hour, daily. You must have a reason why you're looking for that, that cracking correlation, right? It's not that you should trade this blindly. You must have a reason why you're doing it. Why should you take it? Is it because of a breaker block? What is the reason? Is there a key level there? What is the reason why you're taking that trade? You can see how my EURGBP trade, I showed you guys how my EJ trade was from a higher tension order block. But in this example here, this was as a result of what? This liquidity that was left here and this big imbalances, market actually made some CPI movements, right? So price wanted to go and cover it up. So there was a lot of liquidity to the upside, and then we had this PUI here, which has not been mitigated. So this was the reason why price was drawn up. We had this inducement here, and then all of that. So that is basically how this particular stuff is done. Why this particular setup is something that repeats all the time, right? I dare you to go to your chart and study it, right? Don't just go out Monday and just copying what I say. Don't come and ask me any question, my DM. Simply use this weekend, open your chart and study these things. Does it really play out? Go as far as January this year and study these things. Study it with higher time frame sponsorship, with lower time frame confirmations, with time of the day and other things which I use, right? So the other things which you have to also add, like time of the day, sessions, all the other stuff, right? So that is up to you, right? And those things are also taught in my paid mentorship too, right? We also teach about all those other stuff like time and price, Q zones, time to look at certain pairs, what to expect, all those things, right? So this is just the setup, right? Like I always said, this is subject to higher time frame analysis. You must have a higher time frame reason. You must have a institutional sponsorship for taking this particular trade setup, right? So that's basically how it is done. Right. So was this clear? If it was clear, just let me type in the chat section. If it was clear, it was clear to you, just simply type it in the chat. Was it clear? Was it sometimes it's very easy, sometimes easy to do? Is it clear to you? This particular setup, is it clear to you? All right. Someone said it's clear. Let's see other people. Was it clear? All right. Someone said it's not really clear. So I'll post the recording on Twitter so you can check it out, the recording on Twitter. And like I said, these things cannot be taught in just one class, right? So we have a paid class, a paid mentorship class. If you feel that you want to, study these things deeper, I want to know other, want to go deeper into all these things, right? We have a lot of teachings right from 2021, all our videos from 2021 up to date are all there, right? So if you want to join us, you can always send me a DM. If you want to join our class where we have live classes every Sunday. We have a lot of things, super stuffs in our paid mentorship, right? So you can always join us. It's not too expensive, very affordable, less than $40 for 1 year, right? So you can join us if you wish to also learn these things in more details, right? But I'll be posting the recording on Twitter so you guys can have access to it. So as I'll post it on Twitter, public Twitter. So anyone that wants to view it can just watch it on Twitter. No payment, no charges. Just come to my Twitter page. You will see it there on my Twitter page, right? So have a wonderful day. See you guys next week. Don't forget that we have a Twitter space on Sunday, right? So feel free to plug in on Sunday by 5 p.m. Nigerian time for our Twitter space. We're talking about a lot of things. So see you guys in class on Sunday on our public Twitter space. All right, so have a wonderful day. Cheers and God bless.